A very good evening to you. We start here this evening on the business desk as we look at bonds and the development thereof. National Treasury aiming to plug a deficit gap by turning to the bond market to raise revenue. It comes days ahead of the 2024 budget speech, which is dubbed to be the most crucial in an election year, as Finance Minister Ntokozo Khumalo is expected to curtail state spending and meet fiscal demands. Business reporter Ntokozo Khumalo has the details.
Treasury has three options to consider when it comes to finding ways to fatten its wallet: either increase taxes, cut on spending, or turn to debt in the debt markets. One quantitative analyst says there is merit to the debt option, even as the country will borrow 553 billion rand this year to plug the revenue gap.
Hopefully we'll be able to attract a little bit more foreign direct investments, and then we can generate more funding for the National Treasury as well.
However, she also cautions that issuing more Treasury bonds could put the National Treasury against the wall amid lukewarm sentiment about South Africa among foreign investors and a saturated local market.
However, here they are competing with the banks, who also issue floating rate notes, and then it always, for markets, becomes a question of default probability and credit scores.
While she sees potential in the National Treasury going back to the Islamic bond market to issue a domestic sukuk after a decade-long hiatus, Investec's Treasury economist Tessia Jacobs is cautious.
So more debt you issue in the stagnating growth environment, the closer, the more and more debt we're going to accumulate. And then the very negative consequence of this is government pays interest on that debt. For example, out of every rand that the government now spends, 22 cents is going into servicing debt. And that then also crowds out other spending.
While more debts would squeeze out spending on infrastructure and development, it will also worsen the country's risk profile.
It is going to be very difficult for the minister to announce, any revenue and expenditure dynamics, but in the context of what they can announce about infrastructure financing, the reconfiguration of the debt, anything that can help to boost investor sentiment and reduce the country risk premium will be very important for the level at which government issues debt.
In its bond market trends review, asset management firm 91 says, in addition to the uncertainty brought on by the upcoming general elections, numerous policy risks have both long and short-term implications for bond yields. However, 91 also believes that the high income yields on SA bonds sufficiently protect against these risks. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Johannesburg.